Good afternoon, friends. Welcome to Konexio Technical Insights. My name is Rahul Randeria, and I would be conducting today's show. Today, we would be discussing regarding the trends, the setups, the technical indicators, candlestick patterns in Nifty, Bank Nifty, as well as the different asset classes. Now, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that the week could be a face off between the bulls and the bears, and we might see a huge volatility for throughout the week. And Nifty behaved in the similar manner. Initially, Nifty had seen a sharp correction, and from there it started recovering slowly and gradually. And for the last 2 days, I mean to say on Thursday and Friday, Nifty traded sideways and slightly indecisive in manner. It remained in a range in this manner for the Thursday and Friday. And on the weekly basis, Nifty ended with a high wave candle on the weekly charts. So now let us see what we have observed on the Nifty charts and what we are expecting in the next week. Now let me show you the Nifty daily charts. This is the Nifty daily chart. Let me put the indicator RSI over here. This is RSI. This is Nifty daily charts. So let me show you first the Nifty weekly chart. Now this is the Nifty weekly chart, and here you can clearly see that Nifty has, this is the weekly candle. It is a high wave candle. I mean to say whole week Nifty ended traded highly volatile and ended on a positive note with a weekly candle making a high wave candle. Now here you can see 6 to 7 weeks earlier, this was also a high wave candle, and from there we have seen that a sharp rally for 3 consecutive weeks. Now the similar pattern has happened over here. Now, but for this kind of rally, Nifty needs to break its weekly high, which is around 17,442. So until unless Nifty doesn't break 17,450, then we might be seeing that Nifty might trade in a broad range. Now this is the daily charts. Now let me explain you what we have observed in the last week and what we are expecting for the next week. Last week we have mentioned that Nifty has been moving into a parallel channel. Let me show you that particular parallel channel. This was the parallel channel which we have mentioned in our last week, and still that parallel channel is intact. Now if we consider this last 4 days of candle, it is a flag pattern, but for that upward rally momentum on the upward trajectory, Nifty needs to break 17,490 on the upside. So definitely the candle or the weekly candle is looking positive. It is a high wave candle. Most probably we might see some sort of cool off in Nifty, some sort of correction or profit booking, and from there we might see Nifty again joining the primary trend which is up. Now next week is an expiry week, so most probably Nifty might trade highly volatile, because most of the activity would be towards rolling over of the position from the current series to the next series. So we might see a highly volatile trading sessions from Monday to Thursday. So the strategy would be buy on dips. Now let us discuss the important supports and resistance in the Nifty for the next week. So the important support in the Nifty for the next week is placed at 17,117 is the first support. Second support is placed at 16,957, and third support is placed at 16,770. Whereas on the upside, the first resistance is placed at 17,380. Second resistance is placed at 17,500, and third resistance is placed at 17,639. So most probably because of the monthly expiry, we are giving a broad range where Nifty might trade highly volatile. The strategy should be buy on dips. Any dips should be used as a buying opportunity. Now let us see what we have observed in Bank Nifty. So let me show you the Bank Nifty chart. The Bank Nifty daily chart, you will see. Again, this is the daily charts. Again, let me show you the weekly chart. See here, the classical example of two high wave candle. This is the last week's high wave candle, and this is also a high wave candle prior to 2 weeks. So again, after that high wave candle prior to 2 weeks, we have seen a strong weekly candle. Again, a high wave candle. Again, last week was a high wave candle. So most probably there was a series of two high wave candles. So last 2 week has been moving into highly volatile uh, days where the trend was not decisive, but it moved in a highly volatile manner. And currently, the weekly pattern seems to be highly volatile and indecisive in nature. Now let me come to the daily charts. Now this is the daily chart of the Nifty, Bank Nifty. Let me show the rising channel which we have been mentioning from last couple of weeks. Now here you can clearly see it is a rising channel. Bank Nifty is just near the support trend line. So definitely looking at the high wave candle, we feel again we have a strong feeling that looking at the chart, high wave candle on the weekly charts, any pullback might bring in support at the lower levels, and Bank Nifty might trade in positive territory in the next week. But as I said, looking at the monthly expiry, we might see a highly volatile trading sessions from Monday to Thursday. So traders are suggested to trade with strict stop losses, and the strategy should be buy on dips for the next week. Now let us come to the supports and resistance, or let us discuss the supports and resistance for the next week. The important support for the next week in Bank Nifty is placed at 37,304, which is the first support. The second support is placed at 37,012, and third support is placed at 36,651. Whereas on the upside, the first resistance is placed at 37,817, second resistance is placed at 38,124, and third resistance is placed at 38,517. So these are the important supports and resistance in Bank Nifty. And as I said, next week could be highly volatile trading sessions. Any correction should be used as a buying opportunity. Now let us come to the third segment of our show, which is option analysis. In option analysis, we will try to identify where the concentration of the open interest has been seen in the Nifty and Bank Nifty calls and puts. So first of all, let us discuss what we have observed in Nifty calls. In Nifty calls, the action was seen in 17,300 calls, then 17,500 calls, and 17,600 calls. Now here you can see there has been a rise in the open interest, but there has been a significant drop in option premiums. The implied volatility is just between 18.13 and 19.77. So looking at this, we feel that the last 2 days in the Nifty has been under pressure. It was indecisive. So maybe some sort of weakness could be seen, but not a major weakness. Some sort of correction could happen, but that should be used as a buying opportunity on the downside. And looking at this particular resistance area, we feel that 17,600 could act as a major resistance, looking at the concentration of the open interest in Bank Nifty out of the money calls. In Nifty out of the money calls. Now let us see what we have observed in Nifty puts. In Nifty puts, you will see on the screen the action was seen in 17,200 puts, then 17,000 puts, and 16,900 puts. Now here you can see there has been a rise in the open interest, there has been a fall in the option premiums. The implied volatility was little higher. The implied volatility is in this particular strike prices are just between 22.46 till 25.12. So implied volatility in Nifty puts, I mean to say Nifty out of the money puts, is slightly higher. So looking at this particular thing, we feel that in Nifty calls and Nifty puts, the implied volatility is just little higher. Both the sides, that there has been a drop in the option premiums. So looking at this overall data, we feel that next week could be the week for the option writers, maybe call option writers or put option writers. Maybe they might be thinking that Nifty might remain in any particular range. That is the reason why we have seen that there has been a writing seen in Nifty calls and puts on both the sides, on the out of the money calls and out of the money puts. So now let us discuss what we have observed in Nifty, Bank Nifty calls and puts. In Bank Nifty calls, the action was seen in 37,700 calls, the 38,000 calls, and 38,500 calls. Again, here you can see there has been a rise in the open interest, there has been a fall in the option premiums. The implied volatility in Bank Nifty calls is slightly on the higher side. It is between 22.78 till 24.44. So again, the same thing is happening in Bank Nifty calls, after the money calls also. The traders are expecting that again Bank Nifty also might remain in a range. So on the upside, the major resistance for the Bank Nifty could be 38,500 on the upside. Now let us see what we have seen in Bank Nifty puts. You will see on the screen, the action was seen in 37,500 puts in Bank Nifty, then 37,000 puts in Bank Nifty, and 36,500 puts. Now here you can clearly see there has been the rise in the open interest. Implied volatility is very high. I will say, or I will use the word implied volatility in Bank Nifty puts are exploding. It is just between 27.89 to 31.58. There has been a significant drop in the Bank Nifty puts premium. So as I said, next week the smart money, the option traders are thinking that, or might be thinking that the Bank Nifty might also remain in a broad range. So the broad range could be around say 36,500 on the downside, and on the upside 38,500. And the traders, the smart trader, are expecting that Bank Nifty might close flat to positive for the next week. So that is the reason why we have seen that there has been a strong writing seen in the Nifty and Bank Nifty out of the money calls and out of the money puts. So as I said, next week is a expiry week. We might see a highly volatile trading session in this way. The option writers are highly active in out of the money calls and out of the money puts in Nifty and Bank Nifty on both the sides. So we might see a huge volatility for the next week. So traders are suggested to trade with strict stop losses. Use a dips to buy. Do not try to play for huge swings. Just try to play for maybe 80 or 100 points in Nifty and 200 points or 150 in Bank Nifty. Do not try to play for big swings. Try to play the small moves, because most of the week from the Monday to Thursday we might see the action could be concentrated towards the rolling over of the position from the current series to the next series. So let us come to the final final segment of our show, which is option and positional call. I have identified one stock from the insurance sector. The name of the stock is ICICI Prudential. Now you can clearly see it is a downward falling channel, making low tops, low bottoms. Here you can clearly see the volume action. The price volume action is showing strength at these levels, and the stock has potential to bounce back from these levels. And it is a defensive stock. So I just wanted to say that the long-term investors can start chipping in into the stock from these levels. Currently, the stock is quoting around 525. So ideally, long-term investors can accumulate the stock in the range of 525 to 510. The upside target is 585. Those who want to invest for long-term. So the price volume action, the charts are showing that stock is about to make bottom from these levels. So thank you very much, friends, for watching the show. Any suggestion you can give into the comment box. Have a nice trading week.